is Nur Nasrin Ildina binti Ghazali, metric number 279986. So today I will present and discuss the first question about financial asset question. The first question is define the debt investment and equity investment. Equity investment, ordinary share, preferential and other capital assets are all examples of equity investment. The degree to which one corporation investor acquires a stake in the share of another corporation determines the accounting treatment for the investment after acquisition investing. The investor percentage of the investee voting shares determines the classification of such investment. For the purpose of this study, only two forms of equity investment will be discussed: financial asset at fair value through profit or loss, and financial asset accessible for sales. Investment. A debt investment is when someone lends money to a company or organization in exchange for the promise of receiving their money back plus interest. When we deposit money into our bank account, we are essentially lending money to the bank at a predetermined interest rate.
Okay, for next question is question 2. Prepare the journal entry at the date of the purchase of the bond. Okay, date of purchase of the bond is 1st January 2018. So debit investment in bond 860652 ringgit Malaysia and credit cash 860652. So the next question is prepare a bond amortization schedule through 2022. Round up your answer. If you can see here, there have 5 columns for date, cash received, interest revenue, bond discount amortization, and carrying amount of bond. So total cash received is 480,000 and interest revenue is 419,348, and for bond discount amortization is 60652. So next, okay, the fourth question is prepare the journal entry to record the investment received and the amortization for 2019. So this is a journal entry for 2019. If you can see here is 31st December 2019, debit cash 96,000 ringgit Malaysia and credit interest revenue investment in bond. So for investment in bond is 10928 and for interest revenue 85072.
Hi, my name is Nur Izati binti Muhammad Rizwan. My metric number is 280850. Today, I would like to discuss about question number 5 and number 6. So we need to do a journal for both question. And for number 5, the date is 23 January 1. So the debit is cash, credit debt investment 800,000. For question 6, the date is 2018 February 10. The debit is equity investment, credit is cash 2,350,000, and 2020 December 30, the debit is cash, the credit is dividend revenue 55,000. So for the question 7, I will choose bond investment as the best investment to save the company in the long run, because bond investment are less risky and less volatile, and the second one is possess tax advantages that very useful for the company to reduce their tax burden, and the last one is the prices of bond investment are inverse with the interest rate.
Hello everyone, my name is Nur Ain Binti Zaharin, number metric 280155. I'm going to present for this question 8, 9 and 10. So for the first one is the question 8. This question requires us to calculate the selling price of the amanah bonds. So for the first step, we need to identify the maturity value of bonds payable for these amanah bonds, which is 3 million ringgit. Then we need to identify the present value of 3 million ringgit due in 5 years at 6% interest payable annually. So from the table, present value interest factors of RM1 per period at interest percents for N period, which is the table of PVIFIN, we will get 0.74726 for these 5 years at 6%. So we need to multiply with the maturity value, which is 3 million ringgit. Then we will get the present value of 3 million ringgit due in 5 years at 6% interest payable annually is 2,241,780 ringgit. Then the next step is we need to identify the present value of 240,000 ringgit interest payable annually for 5 years at 6% annually. This 240,000 ringgit we get after we multiply the maturity value of 3 million ringgit with 8%. Then we'll get 240,000 ringgit. Then from this 240,000 ringgit, we need to multiply with 4.21236, which is from the table present value interest factors for an ordinary annuity of RM1 per period at interest percent for N period, which is the table of PVOIIN for 5 years at 6% annually, we'll get 4.21236. Then we need to multiply with the 240,000 ringgit. Then we'll get the present value of 240,000 ringgit interest payable annually for 5 years at 6% annually is 1,010,966 ringgit. Then this value we need to add up to get the selling price for bonds payable, which is we add up the present value of 3 million ringgit due in 5 years at 6% interest payable annually with present value of 240,000 ringgit interest payable annually for 5 years at 6% annually to get the selling price for bonds payable for these amanah bonds, which is we get 3,252,746 ringgit. So the next question is question 9. Okay, next, for the question 9. This question requires us to prepare a bond amortization schedule for amanah bonds up to 30 June 2020. The calculation will be like this. On 1st July 2018, the carrying amount of bonds is 3,252,746. So, on the transaction on 30 June 2019, the cash paid is 8%. To get the cash paid for this 8%, we need to multiply 8% with the maturity value of 3 million ringgit to get 240,000 ringgit. Then, to get the interest expenses for 6%, we need to multiply the carrying amount of bonds, which is 3,252,746 times with the 6% interest expenses to get the interest expenses amount, which is 195,165 ringgit. Then, to get the premium amortized, we need to minus the cash paid for this 8%, which is 240,000 ringgit, minus with interest expenses 195,165 ringgit to get the premium amortized, which is 44,835 ringgit. Then, to get the carrying amount of bonds on 30 June 2019, we need to minus the carrying amount of bonds on 1st July 2018 with the premium amortized on 30 June 2019, which is the amount we get is 3,207,911 ringgit. On 30 June 2020, the cash paid is 8% from the maturity value, which is 3 million ringgit. Then we'll get 240,000 ringgit. Then the interest expenses now will be 192,475 ringgit after we multiply 6% with the current carrying amount of bonds on 30 June 2019, which is 3,207,911 ringgit. Then, to get the premium amortized, we need to minus the cash paid 8% on 30 June 2020 with interest expenses 6% on 30 June 2020. We will get the amount is 47,525 ringgit. To get the carrying amount of bonds on 30 June 2020, we need to minus the premium amortized on 30 June 2020 with the carrying amount of bonds on 30 June 2019. Which is here, we will get the carrying amount on 30 June 2020 is 3,160,386. So that's all for question 9. Next, we will continue for question 10. Okay, next for question 10. This question requires us to briefly explain the accounting treatment of bonds retirement. So the answer we get here is like this. As the company predicts that the interest rate will fall during the next few years and is planning to retire this bond, the accounting treatment for this bond's retirement before the maturity date, which are called as callable bonds, is according to para 39 of MFRS 139 mentions that an entity shall remove a financial liability from its statement of financial position when it is extinguished. Before the maturity date of bonds payable, the amount paid on retirement, including any call premium and expense of reacquisition, is called the reacquisition price. On any specific date, the carrying amount of the bonds is the amount payable at maturity, adjusted for unamortized premium, and any excess of the net carrying amount over the acquisition price over the carrying amount is a loss from acquisition. At the time of reacquisition, the unamortized premium must be amortized up to the reacquisition date. So that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. Hi, my name is Nurul Shohana binti Syafi'i, matrix number 279561. I'm going to talk about CC3 in part C, which is leases in number 11 and 12. Based on the question, the lessee here refer to the Platino Berhad, while the lessor are Colton Berhad, Marisha Berhad, and Tinker Berhad. Based on the question 11, we must prepare the journal entry for Platino Berhad at the inception date of each lease. We start with the Colton Berhad. Colton Berhad has lease term at 10 years and implicit rate at 5%. Then we must find the PV of lease payment. 50,000 here refer to the yearly rental, multiply with the 7.722. We got it from the annuity table. Discount rate at 5%, and the end or the year periods equal to 10. Then we must take purchase option, which is 75,000, multiply with the 0.614. We got it from the present value table. After we got the amount, we need to plus it. So we got 161,880. So the journal entry on 1st January 2020 as follows. We must debit right of use asset at 161,880 and credited lease liability at 161,880. Then we go to the Marisha Berhad. Marisha Berhad had lease term at 7 years and implicit rate at 4%. We must find the PV of lease payment. With 12,000 here refer to the rental, multiply with 6.002, and then we must take 15,000 minus 11,000. This number referred to the guaranteed residual value 15,000, and then estimated residual value 11,000. Multiply with the 0.760. After we get the answer, we must plus it. Then we get 75064. We must record it in the journal entry like this. We must debit right of use asset 75064 and credit lease liability 75064. Then we must find the depreciation expense. the amount that we got must divide to 7 years, which is this lease term, and we got 10723, and the credit accumulated depreciation same as above. Then we go to the Tinker Berhad. Tinker Berhad has lease term at 5 years and implicit rate at 4%. The PV of lease payment is like this. We take the rental, multiply with the 4.452, we got it from the annuity table, and then the PV of lease payment equal to 44520. The journal entry is like this. We must debit right of used asset 44520 and credit lease liability 44520. And then we must find the depreciation expense. We have to take this amount, divide with lease term, which is 5 years, and we got 8904. And we credit accumulated depreciation as same as depreciation expense. For question 12, we need to determine the type of lease for lessor using the following schedule. There are 3 lessor, which is Cotton, Marisha, and Tinker. Cotton and Marisha is finance lease because there are 1 guest in the list of characteristics. The Colton contain purchase option at 75,000, so we determine it as finance lease because there are 1 yes. And then the Marisha have academic life test above 75%, which is 78%. So we determine it as finance lease because there are 1 yes. And then for Tinker, there are no yes instead of all of the characteristic is no, so we determine it as operating lease. That's all for me. Thank you.
Hi, my name is Nur Najahada Atira binti Saifuddin, metric number 280054. I will present the question 13A. Question 13A asks, discuss whether the leasing transaction for the photocopy machine is appropriately recorded by Platino Berhad. So the answer is the leasing transaction for the photocopy machine is appropriately recorded by Platino Berhad because based on the MFRS 117 in para 20 state, in the book of lessee, a finance lessee should be recognized as assets and liabilities at amounts equal to the fair value of lease asset or at the present value of the minimum lease payment. Thus, the lease asset is measured at the lower price of fair value or the present value. This is because the asset should not be recorded at more than its fair value. In MFRS 117 also requires the lessee to record the obligation arising from finance lease at the amount as the lease asset. Hence, the journal entry will be lease asset in debit and the lease liability in credit with the amount of the lower of fair value or present value of minimum lease payment of the lease asset. Therefore, the transaction by the Platino Berhad is recorded appropriately. Next, for the question 13B, explain whether there is any implication to Platino Berhad when the company records the leasing transaction in accordance with MFRS 117. The answer is there is no any implication to Platino Berhad when the company records the leasing transaction in accordance with MFRS 117 because the company record the transaction According to MFRS 117 under Para 20, which is initial measurement of the lease asset, since this company use implicit rate to calculate the present value of MLP, which is minimum lease payment, and record the lease asset at the debit side of the journal, so there will be no implication to the Platino Berhad.
Assalamualaikum and hello. My name is Aini Nabila bint Azmin, metric number 280059, and I will explain the last question, which is question 13, part C, about how Platino Berhad should account for leasing transaction for the year 2020. According to this question, Platino Berhad was a lessee, and Ms. Mia explained that the transaction should be recognized as a finance lease based on MFRS 117 leases. So, PPE and liability should be recognized in the book of lessee, and some information of the leasing was stated here. In order to answer this question, the first step I was calculating the MLP, which is I multiply the lease rental and the lease term, and it was added with the residual value, and I got 20,000. For the next step, I calculate the PV of MLP using the table below. As you can see below, the above table was a table of PVOA and the below was table of PV. And the answer I got was 16,611. Next, for the last step for this question, journal entry for Platino Berhad was made. As you can see in the table, the first date was 1 January 2020, and as you can see, the debit was lease asset and credit lease liability, as asset and liability increases during this leasing transaction. And the next one was for 31 December 2020, which is the first account was debit lease liability and interest expense and credit cash. I calculate the interest expense by using a total of lease, which is 16,611, and multiple with 6%. And the next account was for depreciation, which is debit depreciation expense and credit accumulated depreciation. I calculate it with the total of lease, which is 16,611 divided by 5, which is 5 is the economic life, and I got 3,322. That's all. Thank you.